Welcome in. I am the Crypto Bull God, and this is All in the Charts special guest edition. If you appreciate the content, make sure to hit the thumbs up button, drop us a comment, and click the bell icon for all notifications to know when I go live each and every single weekday. You can find me on Twitter, you can find me on YouTube, you can even find me on Instagram as well as TradingView. It is one word, Crypto Bull God. I am proud to present to you Koosh. He is on the other line here. You can see him on Discord here. Welcome in, my friend.
Thank you, sir.
Glad
Pleasure
to have
being here.
Yeah, glad to have you on the live stream. Really anxious to hear your thoughts on the market. I would love if you could just kind of, before we start getting into the nitty gritty of everything, I would love if you could just give everybody a little bit of background about yourself so everyone could understand you a little bit more.
Yeah, you got it, CBG. I appreciate it. So, my name is Koosh. My real name is Kushi Alamzada, but I go by Koosh because it's a lot easier. By the spelling of my name, my sister got lucky. Her name is Sarah. That's much easier. So, go figure. But my background is in the medical device industry. I've worked in startups for the better part of my career. And I feel like that's kind of shaped my approach to investing as well, right? When you're working for a startup, you think about things a little differently. I feel you think about the market in terms of how you're going to approach that in terms of finding innovators, early adopters, and segmenting that market. And in general, the biggest opportunity lies in trying to move along that market adoption curve, and so much of that translates in my mind to investing in a lot of the things we're going to get into today. I am not a financial advisor. Don't take anything I'm saying as financial advice. Do your own research. This is just my views on the market and where I kind of think things are going. And in the history of, I guess, my personal investing career, there are a few times where I feel like I have an edge. Um, let's just call that 5% of the time, right? Where I feel like I have an edge over the market participants. 2008, 2009 was one of those times. 2020, March 2020 was one of those times, and last year was another one of those times. Outside of where I perceive there to be a lot of imbalance, and the chips are stacked in my favor. The market will beat me all day long, right? So I'm more of a long term thinker, investor. I'm not day trading. I'm not. I've got a full time job. I'm looking to just be in positions, accumulate them when they get a lot cheaper, and I see them having greater value. Every once in a while, I will take some swing trades, but those are 3 6 month type positions.
Mhm.
Uh, and that's a little bit about me, CBG.
Yeah, and I think that's a good perspective to have. I think a lot of people who are perhaps inexperienced or naive come into the market thinking they can day trade this market. When you talk about volatility, there's no more volatile a market than crypto. So I think taking a longer term horizon is the smarter opportunity.
Yeah, no doubt about it, man. I mean, human emotion is the big winner, right? Like, and I'm not gonna beat human emotion. I'm not good enough to beat it on a consistent basis. Right now, we're up against, in terms of like day trading, thinking about things like that. Every tick and tack, you're up against machines, right? It's not even a person on the other end that you're up against. 85% of the investing is passive, right? And then the rest is on the margin, hedge funds and CTAs, and most of that is probably dominated by algos. I don't know that for a fact, but that's just my assumption, right? And so every breakout that you see or textbook, this that, they've got it. They know where the liquidity is, and it seems like we're seeing that more so now, where breakout trades get punished, and things that look like great support fail. And so with that framework in mind, I try to just keep it as high time frame as I can. Have some fun trying to get around on the low time frame, right? And did some of that in the last couple days. Actually, I posted on Twitter. I added to some long positions in the stock market, and but I'm just going to let those ride and accumulate more as they get more favorable, in my opinion. And so, looking forward to what I feel like is a really pivotal point in the markets where we are right now. Especially given the action over the last few days, few weeks in traditional finance, as well as with crypto.
Yeah, and I'm really anxious. Thank you for that. I'm really anxious to hear more about why you feel you have an edge this time around. It's only happened a few times based on what you've described, and maybe where we could best position the conversation to start is what your view on traditional markets are, how that sort of factors into crypto and what you're seeing there.
Yeah, absolutely. Let me share my screen. You let me know when you can see my screen, and I'm going to start. We'll start there. How are we looking?
Not seeing it yet. Give me 1 second. Ah, we're good.
We're good?
We're
Okay.
good.
All right. So, I've always kind of had a view, a very macro-based view, and a lot of it is shaped from various inputs. One of them kind of being, I don't know if you've ever read Ray Dalio's book on debt cycles, but a lot of that resonated with me with thinking about empires and how long they've lasted and what has made them prosper and then ultimately, rise and then fall is very much so coincided with the amount of debt that the society, the entity accrues, right? And that compounding of debt, and as we get to a point um, towards the end of those cycles within those societies, you see totalitarianism kind of start rearing its ugly head. And man, does that not sound a lot kind of familiar? Not to get into politics, right? Starting March and
It's sort of ringing. That's sort of resonating with me right now. But we won't go down the politics avenue.
no, we're not going to go there. And then a lot of things on top of that just make you scratch your head. Like, is this really what the world is like today? Like, bring back the '90s, right? Bring back the white picket fence, and not a care in the world, and you're playing all day for the entire summer, just thinking about your next adventure, right? Like, bring back those days. So you kind of just thinking about that in totality. And thinking about the markets, and I've got a monthly chart of the NASDAQ 100 up, and thinking about the last bull market, right, that concluded in a blow off top, and that's a pretty clear blow off top, right? That's unmistakable. You've got a parabola, and that's what a blow off top looks like. The amount of money in the system today compared to the late 90s dwarfs it, right? If you look at the combined M2s, far greater than what potentially was one of the underlying accelerators of asset prices and their expression in terms of assets and financial assets specifically. That's what this is pointing to. If we kind of bring us back to the next bull market, the next secular bull market in the NASDAQ that started, late December, early January of 2009, coming out of the GFC. Obviously, this was the dot-com bust, right? Global financial crisis. I see a very similar structure forming. And what I also am very aware of is the herd is going to generally be wrong, right? In times where the masses are sure of something, again, go back to like March 2020 when the masses were sure of something and it ended up kind of being the opposite, right? Like so many of these things. Well, I can't help but think, the masses thinking this was the blow off top, right? And here we're going to a new bear market, and everyone was positioned here, right? The hedge funds at this time in the fall of 2022 had record levels of cash, sitting on 6% cash. So their moves have been made, their positions had been made, and you had every talking head on CNBC, talking about 10, 15, 20% more to go down. And so, my friends asking me how much further are we going down? Sentiment was just awful, absolutely awful here. And all we did from a technical perspective was kind of test this long-term uptrend, right? Test the bottom of this Bollinger Band. And my expectation was a V-shaped type recovery. And I posted that, on my Twitter in October, that I'd kind of max long my stock portfolio to as much as I allowed myself per my risk parameters. And this was one of the reasons why. Now, get into, this is the old stock bubble, right, paradigm chart, right? And so I kind of view this as what everyone thought was this blow off top was really kind of this first sell-off in this macro bubble that hasn't resolved itself like I would expect it to resolve itself like it did back here. And so while everyone was thinking what I'm kind of pointing at here, right, like this area here was, what we were going down. We were somewhere on this side, right, coming down. My contention is we were really in that range.
It takes, and I will say, it takes a lot of balls to come out during the time period we were at in October and share your view, because that certainly ran contrarian to literally everything that you heard about and read about.
Yeah, and look, and I'm going to share another piece of high time frame data that gave me that confluence, but also gave me the feeling that, and I posted over the last few days, I feel like our next stop is all time high, right? That we were nearing the end of the correction. I still feel that way in terms of stocks, that we're at a pivot point. But I contend when you're in this bubble phase, you don't know you're in this bubble phase. Right? Like I contend that if the people that were up here, this was euphoric, and if you think of euphoria, you don't know you're in euphoria, right? You're clouded. You're that the thing in your brain that controls rational thought is conquered by not only fear but pleasure, and we saw what fear can do to rational thought, right? In March and April of 2020. Now take that same concept in reverse, and that's what that's what the feeling at euphoria is. You don't think you're in euphoria. You think this is the start of a new paradigm, and we're going to keep going. And so, on the other side of that, where everyone was, we're heading to despair. This is capitulation down here. My contention was, no, this is just a bear trap, and I'm seeing a resumption. And here's another reason that kind of gave me confluence for that. One arbiter of truth on the high time frame. This is the monthly SPX S&P 500. This is the 50-month simple moving average. This blue line. Okay, we can go back all the way to, how far back did I go here? 1927, and there's a little bit of history, just a little bit of history with what this area tells us, in combination with the Ichimoku cloud, which took about 30 years to develop. So I don't fade that as well, in combination with this moving average. And what has occurred? Well, when you come into this moving average with such force, think of it as a Hooke's law in physics, which is the concept of elasticity, where the amount of pressure exerted on an elastic object is going to be exerted with equal to or greater force in the opposite direction, right? Think of a rubber band, right? You're pulling that rubber band, and it's going to snap back with at least the same amount of force that it was pulled on, but typically rubber bands are going to go faster. But that's a general concept, right? And you can see that applied in markets as well, with violent drops, right? COVID, violent drop. So with equal to or greater than force, it would be a violent recovery, steep recovery. Tags this. The whole world economy stopped here, by the way. and you couldn't breach this 50-month or the cloud? Okay, so you're telling me that, when everyone and their brother was calling for the big capitulation, right? That's going to do it when everyone's predicting it. Well, no, it didn't happen. We had a V into it, and now with this little head and shoulders, same pattern into it, we're resolving with that same force on the way out. And every time that it's come into this area, it at least gets to the previous all-time high before some action, some correction, right? So we saw that here in 2011. Tags this cloud, reclaims the MA, and back above that previous local high. What do we see with the start of an actual bear market? We saw a rejection in September 2008 of that 50. You saw it fall through the cloud. Okay, I'll get behind that being a bear market, right? Same thing coming out of the dot-com bust. You had a rejection, couldn't get out of this cloud, and again, but what do we continuously see going back is any hard move, right? Hard move in springs out. Hard move into the cloud springs out. So and here's some rejections, and so it was just very consistent for me. What we were hearing, right? What we were hearing was in fact probably the complete opposite of the positioning that I should be in back then, right? It was everyone was so sure of the outcome that that's what I mean when I say the chips were stacked in my favor. That's what I mean back in March 2020 when I took the reins and said the chips are now stacked in my favor. Everyone thinks this is an apocalypse, and that and the worst is to come for financial assets, and all we did was violently test this. But there's always narratives, right? In hindsight, people are going to be like, "Oh yeah, but we had QE and all this good stuff." That's just kind of what gives people doubt. But we also had QE when Bitcoin dropped 50% from March 2021 to July, right? It dropped 50%. I thought Bitcoin was loved QE, right? It just thrives in it. But so everyone's narrative fits their positioning and their mentality. And so that's just a little bit of a background in terms of what gave me that thought back then, CBG, and what gives me the thought today that that I think that this bull market resolves itself in a way that, and let me show you a different chart to kind of illustrate this point.
Yeah, the only thing I'll tack on to what you said, I think you explained yourself so well. You articulated things really well. I can't really add anything on to what you shared because I think you did a great job explaining it. The only thing I'll add on is something I shared with my audience a couple days ago, and that is when you actually look at the major indices, the Nasdaq, the Dow, the S&P, and you consider the fact that we're, depending upon what indice you're looking at and how high we've gotten in price, we've been around 3 to 5% from prior all-time highs. If you go back, and I think with my audience, I went back as much as 50 years, the odds are strongly in our favor now that we've gotten that close to all-time highs that we're going to be breaching the prior all-time highs.
Yeah, that's a great point. I hadn't done that research, but that's good to know. And, kind of a nice segue in terms of, all right, so what do I think crypto is going to do? Specifically, Bitcoin is my focus, but it's going to spill over into, I imagine it's going to spill over into the rest of the industry. Now, if my assumption is that these markets are the real blow off top of this secular train is in front of us, okay, is in front of us. And this is just a post from over the weekend on my Twitter feed. So these aren't updated prices, but you get the gist of what we're looking at here. To me, the price of Bitcoin is much more a reflection of risk appetite and its relationship with the dollar. Not exclusively with the dollar, but there has been a strong correlation. And that's what this chart kind of depicts, right? We've got Bitcoin on the top, NASDAQ in the middle, and this is a monthly chart, and the dollar on the bottom. And again, the past, what I'm showing here in the past is not a guarantee of what's going to happen in the future. These are just some projections. There is no guarantee, right? But what do we see? what we see is with the dollar, we see from 2018, we see it's in a pretty clear, defined uptrend. Okay, this it's a monthly chart, clear, defined uptrend. That uptrend changes right here for 2020, right? That uptrend changes and is kind of confirmed here with this bearish looking candle and trend reversal. What happened at this critical structure with Bitcoin? Bitcoin at this trend change with the dollar, uh, Bitcoin also changed its trend, right? It was in, you had a high here, you had a lower high here, you had a lower high here, and then that was changed right at this kind of intersection. What did the Nasdaq do? Nasdaq was a little bit different, right? You just kind of had a top on it here, it jumped over, COVID kind of pulled it back down, and then it changed its trend with a higher monthly here and established a very clear trend, right? Clear trend, no real blow off here, more kind of distributive action to me. And then we got a trend reversal right here, right as the dollar kind of did the opposite, right? Downtrend clear, the downtrend was broken here, and the dollar starts to make a reversal. Bitcoin kind of flushes all this stuff out first, right? It went kind of parabolic here, and then corrected simultaneously with the reversion of the dollar. And so, where are we now? Right? Where are we now? Well, we've got Bitcoin in a clear downtrend. This is a monthly chart again, right? Bumping up against it, bumping up against it. And then we have a trend change right here, trend and structure of the market. Lower high, lower low. Lower high, and then that's broken. We have a higher high, higher low, higher high, higher low. And what is the Nasdaq doing? Very similar. It's changed its trend, and now we are in an uptrend. I'm not too concerned with, hey, how much are we going to correct here, right? I try to guess where I think there might be some reversals, but this trend to me is up, right? The trend to the dollar changed here for me as well. It went parabolic, broke the parabola. You had a back test, and now the trend has changed for me. We're having a little corrective action within this downtrend. Not to guarantee it's going to keep going this way. It could break out, but to me, that this is an established trend. This is an established trend. This is an established trend. And again, I'm not one for a lot of coincidences, but isn't it a coincidence that this this uptrend with the Nasdaq, is at a 48-degree angle, and right now we're at a 40-degree angle for all intents and purposes, right? Bitcoin's coming out of this correction, 59-degree angle to the top, 59-degree angle. If my expectation is that the true blow off in these markets, CBG, are in front of us, then my expectation is for this to get steeper than 48, right? Than 59.
Right, for a true blow off top, right?
For a true type of blow off top in risk assets, I'm expecting Bitcoin to perform better than it has in the past. And so that's just a little confluence. You asked the question, do I think that Bitcoin needs to that markets need to make all-time highs for Bitcoin to? I do. I'm not a big decorrelator. Like, the markets could tank and Bitcoin's going to do its own thing. I think
Well,
it's too early.
if you actually go back to that chart, there's something that I wanted to point out, two kind of observations, and I want to
Yeah.
make sure that you agree or if you disagree. So the first thing which you were pointing out in more or less words is just the inverse relationship that exists between the DXY and both the Nasdaq and Bitcoin. That's the obvious thing that is apparent here that you were explaining. You can even see it in 17 and 18.
Yep. You can see it in 17 and 18 as well. I don't have that as clearly depicted here, but I have another chart that clearly depicts it. Absolutely.
And there's one other thing, and that is, and this sort of gets to me when I hear people speak about current times and how Bitcoin and crypto are decorrelating from the stock market. And I so strongly disagree. Bitcoin and the Nasdaq have moved in the same general direction, and if you actually look at mid 20 going into 21, just looking at this, and I think a kindergartner could see this, if you actually look at the NASDAQ seemed like it took off sharply at first from the recovery from the beer virus. And then Bitcoin, it sort of lagged, and then Bitcoin went into its parabolic trajectory going into 2021, outpacing the NASDAQ. And so right now, my view is that Bitcoin, it has been lagging the NASDAQ for the past several months, but I view Bitcoin catching up and surpassing that in the months ahead.
Oh, absolutely. I'm glad you brought that up. I wasn't gonna pull this chart up, but I am now because I think you're talking about an important relationship. And let me find it here. Yep, this is it. All right. Bear with me for a sec.
Oh no, that's fine. It looked like a bunch of lightsabers from Star Wars there for a second.
That's right, man. So this one I posted a few days ago, and this is exactly what you're talking about. This is a chart of Bitcoin measured in the Nasdaq, and so
Oh, nice.
again, I posted, when was it? Right here on this arrow. The first time I entered margin Bitcoin exposures in this the first half of the year was in June, was the week this candle right here printed. Okay, this hammer, very similar to what we were seeing back here back in August 2020. And just taking a look at this relationship between the Nasdaq, Bitcoin measured in the Nasdaq, there's a lot of asymmetry here, right? And we saw this kind of inverse head and shoulders, right? We saw this downtrend broke, but to your point, the Nasdaq took off first, and so what we saw was Bitcoin just kind of do nothing against the NASDAQ for a while. This is what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 weeks, man. That's almost half a year, right? Against the
And
NASDAQ. And then to your point, it takes off. It absolutely takes off. So it does this thing where it breaks its downtrend. You kind of get a rejection at an important line. It back tests this downtrend, tries to make another move, rejects, gets caught by the cloud. This is the weekly, comes out with a little stutter step, one more, and then it's gone. What are we doing now? Downtrend against the NASDAQ, breaks out, rejects, beautiful test of that downtrend line. That's like textbook, right?
yep.
And then tries again, no go. It does a little bit better than it did last time against the NASDAQ. And then it drops right to this cloud. Again, this is an indicator that took about 30 years to, to formulate, with this beautiful hammer reversal candle, explodes out of it. And we got this little stutter step, kind of like we saw here. And now, what are we doing? Kind of like this little, all right, one more pit stop at support. And this is one of the other reasons why I started scaling into my long minor and MSTR positions.
Yeah, I saw your tweet earlier.
Yeah, and so this is another point of that confluence to where I'm saying, from here on out, if my belief is the Nasdaq is going to continue its uptrend, that's my assumption, right? If this, then that.
Right.
That's my assumption. If that's my assumption, then my assumption, based on the history of how these two assets are measured against each other, and again with the asterisks, right? The past is not guaranteed to what's going to happen in the future, right? So I could be completely wrong with this, but the probabilities are stacked in my favor, I feel like. And so if that's the case, I'm going to be placing my wager, my chips, in the direction where I think the outperformance is coming. I'm not doing it when everyone's like, "Oh, this is the greatest." So I get into the, buy Bitcoin. I want to do it before, right? I want to do it before that arrives. I want to do it when people are upset, impatient. What's going on with this market? Second guessing, get a bunch of red days. That's where I want to start building additional exposure. And one of the reasons why I, in fact, did just that. And on this morning's weakness, I doubled those positions.
So what is your view in terms of the Nasdaq hitting all time highs and kind of how that factors into how that translates to what could happen in crypto or Bitcoin? So I guess there's two questions baked in there. What's your view in terms of when the Nasdaq major indices will start to create new all-time highs, and then also what would be the impact on Bitcoin and crypto when that does indeed happen? If we have to say if, because there are no
Yep.
certainties, but if that does happen.
Absolutely. This is just another one of my views, right? I'm not married to like one thought process. I know I do get a lot of questions on the tweets about like, what's your invalidation? What's your invalidation? And I'm not good at that because everything has been validated up to this point from the fall lows. I've been expecting a V-shaped recovery. I've been expecting what we saw last year is a correction. I was wrong about how deep the correction went, right? I'll be the first to admit, back in 2021, I saw Bitcoin going way above 100,000. Now,
Yeah,
did I have it?
I'm right there with you, brother. I got that correction wrong. Yeah.
Was I tweeting out like I'm long, I'm going margin, I'm buying my? No. Was the conviction high on that? No. I accumulated spot way lower and was, riding the euphoric train. But we've got to learn from the past, right? Learn from the past.
Absolutely.
Get better. And that's exactly what I feel like I'm doing. And so that I was wrong about. Wasn't wrong about when I took the reins at the bottom in October 2020. Wasn't wrong when I'd sold all my Nasdaq positions in early 2021. I was wrong about thinking the Bitcoin was going much higher than 100K. I was wrong at how deep I thought the correction was going to go. I thought Bitcoin, I said lowest is going to go 27, right? And it went way lower than that, right? The Nasdaq, I was pretty close to catching that bottom. It went down a little bit further for a little bit longer, but I just kept accumulating. Because my long-term conviction, my long-term bias was this was not the start of a bear market. I've showed the supporting thesis to that. And so when we talk about what are my invalidations at this point? Well, so far they're I don't need to consider them, right? I'll get into what those possibly are in a couple other charts. But for now, the market's doing what I expected. Bitcoin is taking way longer than I expected, right? I initially thought we'd be getting my all-time high targets in the summer. That didn't happen, right? The timing is the hardest part. And when you're making these big calls, I'm going to be wrong more than I'm going to be right? But all I care about is being in the position for as much time as I can. And the timing is much more difficult. Now, to your point on like where do I see the Nasdaq going? This is just kind of another idea, the Livermore speculative chart, right? This cylinder, if you go back to 2011, you really do.
Livermore speculative chart. Can you explain that for a moment? What that is?
Yeah. So Jesse Livermore kind of came up with this concept, and his thought was being in the uptrend, right? In the right uptrend is where you obviously make the most money. And and this is kind of a sample of one of his charts, and thinking about this concept on a high time frame, this cylinder wide mouth opening. This is the Nasdaq kind of following, right? Pretty well in terms of looking at just this macro move, through this cylinder type structure, resolving in my mind much higher. And I can see this market, getting to all-time highs end of the year, Q1, Q2 next year, could even blow off into who the heck knows. And then that's when the real move starts, when the least amount of participants are expecting it. Looking at Bitcoin in the same light, right? I can kind of see this is another one of the concepts I'm toying around with. If you think about the bull market in Bitcoin as just being one massive 5-wave move, and I'll kind of get into a little bit of the Elliott wave in my next section here. But one of the concepts of Elliott wave is these 5-wave moves, and the concept of an ending diagonal being one of the impulse structures in terms of how the fifth wave ends. And so if you look at 1, 2, 3, 4, and a 5, kind of following that a little bit, right? And right up here kind of coincides with the top of the cylinder, and that's where I can kind of see the rejection, or it can overthrow. It most certainly can overthrow this and then reject. And if this scenario plays out, CBG, I am fully prepared for everyone to be saying, this is a new bull market, right? You know, the halvening's in front of us. The ETFs are live, all that good stuff. And
people need a narrative. That's the thing. People, I've just learned this much more so over the past several years. While I've changed my own personal investment philosophy, is people need a narrative to latch onto to make sense of things. And I too, as well. I've sort of been, for me personally, given how July came in, it wasn't as bullish a month as I was anticipating. I'm starting to lean a little bit more towards having a blow off top in the early part of next year. I think with whatever scenario does play out, I absolutely feel like the halving event is going to be a sell the news event, and it's not going to play out how everyone is. I mean, literally everyone has a script for it.
Everyone has a script for it. And I just kind of pivoted to another chart that speaks to what you're saying, okay? And if we look at Elliott wave moves, nothing depicts it clear to me than if we just kind of, this is a weekly chart of Bitcoin, right? And an Elliott wave describes, market psychology moving in waves, right? Wave of euphoria, wave of doubt, wave of excitement, wave of it's over, right? And those waves are kind of documented within price structure and movements. And if we see 1, 2, 3, 4, 5 wave movements, you've got these impulsive movements, you've got corrective movements, you've got impulsive movements, you've got corrective zigzag movements, you've got impulsive motive wave movements. Within each of these, it's like broccoli, right? You take a piece of the broccoli off and it's going to have the same structure as the big piece, right? And every piece you take out of it subsequently is kind of like a smaller version of the bigger piece.
Yeah, it's a good analogy. I never thought of that.
Yeah, so you look at like these individual pieces of the broccoli, right? So this first impulse had 1, 2, 3, 4, 5, right? Within 5 moves within that move. And then you've got, ABC type correction, ABC. And then this third macro move had kind of 1, 2, 3, 4, 5. But what you were saying is so true. We need a narrative, right? Tesla buys Bitcoin right here, right? And that's just what we needed to propel the market from the 20s, the high 20s into 42. It literally, like, what, a week and a half? And then boom, it was at 58,000 within a month and a half. And then we get what, China mining ban to kind of explain the price action, right?
China just is the ultimate. It's ultimate FUD constantly.
Ultimate FUD constantly. And here's my thought on this, right? Is and I look at this correction and think to myself, well, what does the market think, right? The market thinks that this was kind of our all-time high, where I'm pointing at right here, right?
Yep.
This was all-time high. Bull market ended, bear market, and this is the start of the new bull market.
Yep.
Looking into Elliott wave theory, you can find precedent for this type of structural move called an expanded flat correction, which isn't too common, but do occur where you think, oh, we're going back, right? All-time highs, here we go, bull market's back. And no, that was just a correction within a bull market. And my God, does that line up here, right? You've got this previous all-time high, then you've got a corrective move. Then you're coming out of that corrective move and you breach the all-time high thinking it's on again. Got an all-time high, you got this corrective move. Come out of the corrective move and you think you're going back again. And no, the market reverses. And now we're back into a very well defined downtrend. The news is the worst at the bottom, right? FTX collapse. Um, but if I was smarter back then, right, it's all about learning. I would have said to myself on the next chart that I'm going to share that we were just in a clear defined downtrend that hadn't ended yet, right? And so, um, the news is worse at the bottom, but I tell you what, the symmetry is also the best at these critical structures, right? So all of this FTX collapse, and if we're just kind of looking back to 2018, this is just a series of lower, higher lows, right? Just from a macro perspective, this chart is in an uptrend to me. This is in an uptrend, and we broke this downtrend, right? We broke this downtrend, and now we're at a series of higher highs, lower highs, higher highs, lower highs.
Lower lows. Yep. Lower
Or
lows.
excuse me. Yep. Oh no, higher lows. I meant to say
Higher
higher
lows.
lows.
Yep. Yep.
Higher
Higher
lows.
lows.
Yep.
Yeah,
Yep.
and
And
that's people lose that perspective if you're not zooming out. The higher highs and higher lows are one of the most critical things that you need to establish. Well, it is actually the fundamental thing that you need to establish for an uptrend. It's the true definition of it.
exactly. And how much Bitcoin did Tesla buy back here that sparked this furious run? They bought $1.5 billion worth of Bitcoin. $1.5 billion worth of Bitcoin. Can we think of any major news that might be on the horizon, right? That might be like kind of right around this structural area in the chart where we are now, if this is to play out like I'm projecting that it is. I don't know. Are there asset managers that manage $9 trillion worth of capital that may be looking to allocate into an ETF? And how much gets allocated into an ETF? Well, Grayscale holds what? I've got it written down here. 18 billion. QQQ holds 200 billion in assets. So you're trying to tell me that Tesla buying 1.5 billion is good enough to take this market from 25 to 60 in
Hmm.
the snap of the fingers? But you know, and we're seeing sprinkles of this narrative emerge today. CBG, Tom Lee came out and said an ETF approval gets the price of Bitcoin to 150 to $180,000.
That just come out today. I didn't see that.
That came out today. That was on CNBC. So you're already hearing it interjected into the mainstream, which in my mind justifies. And if that's the news, that's the news. I don't know that that's going to be a news. I don't know that the ETFs are going to get approved. Right? This is all just speculation. But the
Right.
chart is telling me there's major news in front of us. There's major news in front of us. And so that's my interpretation. Whether it's the ETF, whether it's something else, I don't know. Whether it's as Apple maybe announces they buy Bitcoin, that's speculation. I don't know, but that's my interpretation of the high time frame charts.
What do you
Uh,
view? What are you viewing in terms of our current state right now? Because I have my own thoughts. What are your views in terms of the current market sentiment?
oh, the market sentiment right now is it's fantastic. It's no one knows what the hell's going on, and half the market half the market's like take time off, right? Accumulate. You've got till 2024, 2025. This bull market gets kicked off post happening. It's the easiest trade of the century, right? The other half is now saying, especially today, I was seeing on the wires, there's doubt that this is really was a correction within a bull market, and maybe this could be true bear market resumption. And so the market seems to be very indecisive, climbing that classic wall of worry. And retail is nowhere to be found. Like
Oh,
I,
I
I,
agree there.
I think you could walk outside of your place in Florida and poll 100 people and say, hey, what's the price of Bitcoin? And two of them might tell you the price and get close.
Well, I
The
think
rest probably.
I use my mom as the perfect example. With all due respect to my mom, I use her as the perfect example of retail. I will, at different points in conversation with my family, I'll interject crypto every now and then. And my mom said to me a couple weeks ago, she said, CBG, because, my family also refers to me as CBG, CBG. I'm not interested in Bitcoin until it's $50,000. That's what she said
Yeah.
to me. And that really is the retail emotional sentiment. I mean, my view is there's a mix of complacency and there's a mix of still fear about dropping significantly lower. There is a prominent influencer who will go unnamed who was very I will say infamous for calling for $5,000 to $10,000 Bitcoin towards the end of last year, and now I'm seeing $15,000 popping up in
Yeah.
various spots.
This is what you want to see if you're an investor and you're invested right now. You want to see the most prominent influencers, and now there's a kind of a theory that's going around that, oh, there's a whole blow off top camp. There's no camp. Look, Twitter is an algorithm machine that feeds you, what's going to agitate you the most. There's probably 10 people on this app with hundreds of million people that really think that Bitcoin is poised to make all-time highs in short order, right? You go poll 100 people, like I told you, uh, you know, in even finance, right? Outside of crypto Twitter, ask them what they think the price is going to be in 3 months, 6 months, a year, 2 years. And I would be hard pressed, and I would take this bet. I'd be hard pressed if more than 5%, any of them were projecting any type of rapid price appreciation within 3 to 6 months. When Bitcoin in its history has moved in 2 weeks from 29K to 48K. And we have some of the most bullish catalysts in front of us. But
Well, I think you got a lot of PTSD going on. A lot of PTSD, a lot of people forgetting just how quickly this market can move.
and now you're getting to the next part of my conversation here, which is herd mentality. Okay, a herd mentality goes back thousands of years, right? Where you were part of a tribe and tribalism, and if you didn't conform to the tribe, you'd get kicked out of the tribe, and you'd be on your own, and you wouldn't survive, right? Or you could look at those wildebeests. If you ever watched the Nature Channel growing up, right, crossing that river, the first wildebeest gets spooked and runs in a direction. What do they all do? They all turn and they start booking. It's literally all at once. They don't all see the crocodile. They don't see that big Nile crocodile, right? It's one that starts moving, and then in unison, they're gone. Because if you're the last to move, you die. Your life is depending on herd mentality. And so that you're talking about things that are ingrained in our DNA, in animal DNA. And so when we apply that to financial markets, right? We apply it to financial market. We're seeing that play out today with everyone talking about, oh, it's the happening and beyond, and that's the comforting, acceptable, if you're an influencer, you have a big audience narrative. That's why I love Tom Lee's, because he always kind of goes against the narrative. Did that at the COVID lows, is doing that today, right? And the question ultimately is whether you believe an ETF is imminent or not, is the smart money going to wait? Right? Is the smart money going to wait? If 150K Bitcoin is 2 years away, 2 years, forget 6 months, forget 8 months, forget a new administration. For a long-term investor that has a 4-year time horizon minimum, 4-year time horizon, is that return on your capital acceptable for 4 years from today? Right, 30 to 150 to 180. I mean, where else are you going to get that return of capital in 4 years? So the question has to be, is smart money that doesn't care about the price today, tomorrow, 6 months, that simply is looking to accumulate an asset that they have been wanting to get exposure to? And we're not talking about people that are YOLOing 60, 70, 50% net worth. There's hey, we want a percentage exposure. We're a family office. We've got 5% allocated across 20 different things, and we're not going to go 5% in this sector. We're going to start with one, right? 1%. How many are just going to do that, right? In anticipation of, we see some bullish catalysts ahead, and the narrative's changing, and the ESG narrative is changing, right? Where I thought Bitcoin was bad for the environment. Remember, the whole crypto mining is awful, and China, that's why And now it's literally reversing in front of our eyes. This is no coincidence. This is no coincidence that the narrative is now being shifted in front of our eyes, but the herd mentality and what you just said, PTSD, there is no comfort in thinking in those dimensions at this point, because you're going against the herd, and that's a very unnatural thing to do. It's a very unnatural thing to do. And if we just look at CBG, let's just look at the high time frame chart on Bitcoin. And before we look at the chart, I'm gonna pull this over. Bulkowski did an analysis, okay, and I'm just gonna really just zoom this whole thing up, and looked at all sorts of chart patterns across a number of years, and identified 39 of them, I believe, or 34 on here. I might have cut off the remaining portion, and said, all right, what are the best performing chart patterns? And mind you, this is a high time frame chart. So we're not talking about news. We're not talking about whether you should buy or sell anything. We're just talking about, from a structural standpoint, what is the most bullish. In his analysis, was the bump and run reversal bottom. It ranked number 1 in terms of the best performing, and in terms of 6 in terms of failure rank. What does that mean? That means 1 is it fails the least amount of time, right? 1 is the best in terms of failure rank. So it's ranked 6 on failure rank, but it ranked 1 in terms of performance. Now I'm going to zoom down. Let's just take a look at this high time frame chart of Bitcoin. What is a bump and run anyway? What is a bump and run? Let's look at a bump and run. So this is a bump and run. Okay, so it's a structure with a very well-defined downtrend, right? Which is just simply a series of lower highs, lower lows, and then, trying to kind of get out of this, and then it just kind of bumps down. It fails, and there's a big shift pretty quickly in market structure, and then it just kind of bounces around and accumulates for a while, and then it comes back up to try to challenge that. In this example, it rejects, and then it reclaims it, gets a retest, and then it's gone. This is the number 1 in his analysis. Now, what do we have with Bitcoin? Let's see here. We got a high time frame chart that shows a downtrend. We've got a lead-in phase, right, where you've got 1, 2, and then it's kind of coming back up here, and this is a pretty rapid, right, decline in price, acceleration in price, right, from 40,000 in a matter of weeks to 17K. And then you just kind of have this, kind of doing nothing bottom, and then you retake this downtrend, back test, and now uphill run. Okay, that's kind of cool, right? And no guarantee that that's going to happen in the future, but it's just that's nice to see, right?
Well,
Drowning out all
thing, and that's the thing about technical analysis that I try to help everyone to understand on the channel, that it doesn't do technical analysis. Is literally, and as a data person, given sort of who I am as a person, this is why I appreciate it so much. Literally, all we're doing is we're using historical data that helps support these price patterns. In this case, we're looking at price patterns, right? Price
Yep.
patterns show up in all sorts of different charts, and they have a statistical likelihood of playing out. And you have a valid pattern drawn here. It has a high statistical likelihood of playing out. It's not a guarantee, it's just present in the data, and history tells us, hey, there's a high probability this thing could play out.
That's really well said, man. You're trying to give yourself the stack the deck in your favor, right? By increasing your probabilities and taking all the inputs to do that. That's exactly what this is. It's not a guarantee, but it's attempting to give you all the information to make an educated decision about how you're viewing the markets. Now let's look at another pattern. Let's look at the one that fails the least. Okay, so the number 1 in terms of failure rank, the rounding bottom. All right, what's the rounding bottom? Let's take a look at that. Let's see if we find any of those in Bitcoin's price structure. Okay, this is the rounding bottom. What is a rounding bottom? Basically, kind of rounding type structure, right, where you've got a pretty defined neckline, and it just kind of bounces around, starts to slowly move back up, almost in the same trajectory as it kind of came down. breaks out. You got to retest to this neckline and then go. What are we seeing here? Right, we've got this neckline. We've got rounding type of bottom, right? Pretty close, not exact, right? It's not the exact image, and you don't always get an exact image, but it's pretty close. You get a breach of this neckline, and what do we have here? Got a textbook retest, right? And so, again, not a guarantee, but just lots of points of confluence, just showing us that, that what we're dealing with is a very, from a technical perspective and a probability perspective, a very bullish setup that you just don't get that often. And last but not least, I'm going to throw a little Stan Weinstein in here because I really enjoyed his book on trends. Okay, and he uses the 30-week moving average, and let me just get rid of these here to tell you what trend you're in. And John Wick, I hear him say this in a space a couple years ago, and that's what got me down the rabbit hole. He's on Twitter, and I really appreciated hearing that because it got me looking into this concept, and boy, does it tell you a lot. And again, nothing's guaranteed, but according to Stan Weinstein, the 30-week moving average and the direction of the market are highly correlated, okay? Is to say, when you're above the 30-week, you're in a stage 2 uptrend. Stage 2 uptrend. And that's defined at kind of looking at this picture right here, right? This is the 30-week. You've got an accumulation base. We kind of see that. We see that right here as well, right? You got this accumulation base. These are these two lines, right? And you've got the 30-week coming down, and his ideal buy zone for investors. Again, this isn't telling you to go buy Bitcoin. This is just what he's saying in terms of looking at chart structures like this, was a reclaim of this 30 after you've broken out of this basing structure. So what do we see here? Basing structure, broken out, and this is kind of that zone in my mind according to how he illustrates it, right?
Was that at like 25?
Yeah, right around 24, 25. Like that would be the zone if you were unsure, right? And let's kind of backtest this a little bit with what he was saying. So let's look at if this told us anything at the top here, right? So if this is a stage 2 uptrend, a stage 3 is what he calls a distribution. Okay, and let's even draw these lines kind of like he's got, right? He's got one there, and then something like that. And he's got a distribution going on, which it looks like, and kind of flirting in and out of this 30, and then you get a hard rejection right here, right? March 28th, 2022, and that marked the beginning of this stage 4 downtrend. And so that checks out. like if I know now what I knew then, right? I'd be looking at this saying, maybe this thing is just getting started, right? Whereas back here, I was saying to myself, nope, I still think we're going to all-time highs, right? But you got to learn from your experience and get better. And so what I'm learning now is this is a word of caution. And in fact was right. This initiated the stage 4 downtrend into a stage 1 accumulation, and now we're in a stage 2 uptrend. And why are these important? Because he contends the most money is made in a stage 2 uptrend. That's where investors make their greatest returns, is in these uptrends. And get out of the market somewhere in stage 3. Stay out of the market when it's a defined stage 4. And depending on your thoughts, I was accumulating a lot in here, not necessarily because of this analysis, but because the price of Bitcoin had gotten to what I considered great value. But in terms of if you're not thinking about the market like that and simply in stages, then this is where kind of this uptrend is now identified. So yeah, I felt like that was important to share here as well.
Yeah, not to mention, I mean, there's so many different patterns that you shared here. Not to even mention the fact that there's an inverse head and shoulders in play too that we saw back during the
Oh,
correction.
absolutely, man. Absolutely, right? You got one right here, you got one right here, you got the head right here, and it's doing exactly what you're saying. Testing that neckline of the IHS,
Yep.
and what's the indicated move off that? So, let's see.
I forget. I thought it was up to the low $40,000 area, but I forget.
Let's see. I'm going to measure it right now. Yeah, low 40,000s exactly. Just off this pattern again. So, very interesting indeed, man. And so you kind of combine all that with sentiment, with the way the market seems positioned, especially when it comes to Bitcoin and crypto. And I don't know. I just don't see everyone winning.
Well,
Everyone being, you know?
yeah, I something you said real quick that I wanted to hit on that really resonated with me that I've tried to share with everyone, and it's how I operate as well. It's probably one of the reasons that I respect your viewpoints. I mean, you're a pretty humble guy. I mean, you look at life and say, you know what, I didn't get this correct the first time. Like when I went through this, there was something about the market that I wasn't reading correctly. So I'm going to take this as an opportunity to learn. I'm not going to kick myself over it. I'm not going to beat myself up over it and get cynical about it. I'm going to learn from it, move forward, and learn something, right? So you and anyone who has that frame of mind will benefit tremendously moving forward. I also think it's a personality thing. It kind of plays out in all aspects of life, but I think you really well stated that.
Well, you know what, man? I challenge anybody to show me, a perfect record. I just it's impossible, right? The person with a perfect record is a person that bought Amazon stock, one of the four people that bought it when it IPO'd and didn't sell. That's
Right.
it. That's the
Right.
number one performer. There's four people, and Bezos was one of them. You're not outperforming. You show me a trader that's going to outperform trying to get the ins and outs of timing the tops and the bottoms from when that stock first traded on a financial exchange to today, and I'm calling BS. It's just not possible. It's the odds are heavily against you in anything, right? And so, yeah, you can make great calls, but if you're making big calls with a lot of conviction, you're gonna miss a lot too.
Oh,
With
absolutely.
that's just a nature of the game, and so you've got to be humble. You've got to be willing to learn and get better for the future, and that's what I'm trying to do, man. And this is a good segue because my last two charts get into why I believe we're near the end of the bull market that started in 2019.
Yeah, and
And
and I'm glad you're getting into this because I did want to get your views in terms of where you think we're at in terms
yep,
of Bitcoin and crypto, and then also just why so many people are subscribing to this 4-year cycle theory.
yeah. So we went over the Elliott wave impulse corrective structures on
Yep.
daily, weekly time frames, and now we're really kind of zooming out here and just looking at the life cycle of Bitcoin in general. Okay, and these waves really show up, in my opinion, well with Bitcoin cycles very clearly, and we're going to start with that premise, okay? That each of these cycles, which I've got them marked, right? This high to this second high to this third high, and I've got one an imaginary one here, kind of dashed out to the last high, right? Where everyone thinks this thing ended. But let's just go through some general assumptions that we've been sold that are or told. Let me not say sold. um, uh, so the general assumption or at least the general DNA of previous cycles, let's just start there, has been 1, 2, 3, 4, 5 moves within each cycle. Impulse correction, blow off. Okay. And relative strength index, RSI, which is what I've got illustrated down here, confirms that to me. What do I mean by that? And what is RSI? RSI is measuring the velocity, the power behind the move, right? If you think about a dam holding a lot of water back, that dam comes down and there is just water rushing. Water is rushing. It's powerful. You get in front of that and you're toast. That's like an RSI that's getting up over 70. 70 is overbought. You like to, on a weekly time frame, see RSI get over 70 because it tells you there's a lot of power behind this move and it's likely just getting started, right? As we see with these impulses, when it breaks 70, it moves and price follows, right? Price is like the raft on the water after the dam bursts. The raft's just going to keep going even further. And the raft can go further as the water subsides because there's potential energy that's making that raft travel further, right? Even as the water subsides, the raft's going to drift a little further. And that drop in RSI tells you that momentum is starting to wane, right? And that's also a nice indicator that potentially the move is reversing. But I'm digressing a little bit. So in this first cycle, you've got RSI showing us these impulses, okay? Elevated over 70. In the next cycle, you've got 1, and I'm defining the 1 as the RSI overbought, right? So 1, 2, correction, 3, 4, correction, 5. And in this cycle, you've got very clear 3 impulses, right? Showing up in RSI overbought on a weekly time frame. Okay. All right. So we've got at least 3 here. We've got more than 3 impulses that are expressed, RSI movements over 70. In this third cycle, again, we've got multiple times where the power behind this move and is they're greatest at 1, at 3, and at 5. Again, thinking about, right, a 1, 2, 3, 4, 5 wave move, 1, 2, 3, 4, 5. And also notice, I've got these angles here. The 5th wave is the steepest, 78 degrees. The 5th wave is the steepest for cycle 2 at 55 degrees. The 5th wave is the steepest at cycle 3 at 51 degrees. Okay, so far, we've got a series of events that have all happened each cycle. What else has happened so far? They've gotten longer than the previous, right? 896 days, 1,470 days, okay? If the cycle were to end here, November 2021, it would be the first cycle where 3 things happen, excuse me. Number 1, we only had these 2 impulses, 1 and 2, with sustained movement, over the 70 on the RSI, right? We had 1, 2, 3, and then if this I'm to believe was a truncated or just a short 5, it would be the first 5 where the RSI didn't get into overbought. Okay.
How high did the RSI actually get there? How high was it? It looks like it's about 65, 68.
60. I've got it at 69.
69.
Like,
okay.
Literally rejected there.
Yep.
And those type of areas are consistent with, like, right here, like back in September 2012.
Yep.
I've got a rejection at the same level, and you have a correction. And if I really zoomed in, I don't want to ruin this chart. I got to redo all the angles.
Right.
This is a flat correction right here. 1, 2, and this is a flat correction. Like, this is almost a zoomed in version of what we're looking at here. Hard to see, but again, a rejection at that RSI is indicative, in this case, of corrective price behavior, a flat correction. And so it was here as well, right? You get a rejection here, and this was corrective price action, right? Corrective price action. And so what do we see here? Again, rejection August 2019 at 70. 69, same thing, corrective price action. So again, not a guarantee. This is just the way I'm viewing the market. This was a correction, not a new all-time high. So this would also be the first time that the length of this cycle was not longer than the previous, right? So this distance in time is shorter than this one. So that's two things. So we've got we don't have three clear impulses. We have a cycle that's now shorter than the previous. We also have number three. What's supposed to happen when you break previous all-time high? You're supposed to go to new all-time high, right? Now, isn't that what we're told? Isn't that the narrative? Price discovery? That's what I was feeding into. Price discovery. That didn't happen. So it would also be the first time where that didn't happen. So that's three strikes, and I'm going to give you a fourth strike. Now I'm going to give you a fourth strike. Well, in each of these previous cycles, if we just take the Fibonacci relationship, and for anyone that's looked into Fibonacci, the guy was a mathematical genius, found a relationship between numbers which starts with, you've got 0, 1, and then 3, and the sequence of adding the two numbers previous to get to the next number, and then you keep that sequence going, and there's a relationship between, if you put a Fibonacci table up, whether you're dividing one of the Fibonacci numbers by the one before to the one after, all that math shows up basically in everything that you do in life, and it shows up a lot in finance. And so I just say that to illustrate why I use Fibonacci along with Elliott Wave here. So if we look at a previous all-time high and start our Fibonacci relationship from that point to the low of the current market, okay? The 4236 or 423% extension of price from that point in time is this level, okay? Is this level. What did Bitcoin do when it interacted with this Fibonacci level? It went past it, it tested it on its way to all-time high. Okay? That's just an N of 1. It doesn't mean anything. Now let's look at the second one. We're starting at the previous all-time high, and we're dragging our zero Fibonacci down to the base of the current bear market low, and I want to see what happens at this 4236 extension. What did price do around that area? It came up to it, it exceeded that area, and then you got a retest of that area to the T, mind you, to the T, right? And then it went on to its fifth wave final impulse. So this also would be, so this is an N of 2, okay? It's not a big N, but we're being told that things that happen every cycle have to happen continuously, right? So I'm doing that here and saying this has happened the last two cycles, and if we draw those same Fibonacci relationships off the previous all-time high and the current cycle low, which I'm contending was back in 2018, of a current cycle that has had 1, 2, 3, 4, and we're 5 is in front of us, right? Which is why I say we're at close to the end of this bull market. Well, what do? We didn't have any interaction above the 4236 extension, which in the previous two cycles it did. And so what's aligning with these crazy price targets I'm putting out there, CBG, right? Like I put 166 to 100 to $266,000 price projection before the end of the year. Well, that's in line with a breach of that 4236, a retest.
Is that 75? Is the 4236 at 75?
It is, yeah, 74,955. And so finally, we talk about angles, and I'm big on math and angles and symmetry. And again, there's no guarantee that anything from the past is going to predict anything in the future, but there's a lot of rhyming going on with not only numbers and Fibonacci's, but angles as well. I showed you that in that chart from my Twitter feed, right, with the angles of the Nasdaq and the angles of Bitcoin. Like, there's just a lot of coincidences with these angles. And so when Bitcoin is fifth wave, if A then B, if 5 is truly in front of us, then the assumption that the fifth wave is the steepest is a fair assumption. And it's not only a fair assumption, it should be the base case assumption based on the math. The math of the last cycle, the fifth was the steepest. I don't have them listed out here, but 51 is way steeper than what we're seeing here or here, okay? 55 was the steepest in these progressions, and 78 was the steepest in that first cycle. So if all I'm saying is this cycle, it's not the steepest, and it's the same impulse angle as the first and the third, so 29, 28. Let's just take a conservative look at, right? If 5 is in front of us, and if the angle isn't the steepest, and it's just the same as the third impulse and the first, which wasn't the case here, wasn't the case here, wasn't the case here, that indicated angle and confluence with the 4236 takes us to a price of, on this chart, $280,000 by the end of December. Okay, so that's not a guarantee of anything, but mathematically and historically, this would be exactly in line with what Bitcoin has done in the past, if these theories, in fact, being the reality, which we don't know. We won't know until we see this thing play out. And let me give you my final chart. And if you have any questions on this, I'm happy to come back to it. But the final chart.
So your base case based on that chart, your base case is still a blow off top this year.
It is. It is. I think people underestimate the force of gravity and how quickly things can move and how quickly narratives can change. And just because, it's the price action looks like crap today, we could be at 60,000 in 2 weeks.
I agree. No, I totally agree with that statement.
That could literally happen. I'm not predicting that's happening in 2 weeks, but in this market with the dynamics at play with Bitcoin in terms of how much BTC hasn't moved, 69% hasn't moved in the year. There's 2.3 million less BTC on exchanges. Illiquid supplies at 78%. I think 4 million or so BTC on exchanges right now at historic lows. Small entities are accumulating 2.6 or 2,000 Bitcoin a day. Illiquid supply is one thing, but demand is the important part of the equation, right? And so you do have the illiquid supply part of the equation, but doesn't mean anything without demand. But that can change on a dime, and I'm seeing the narrative unfold in little pieces in front of us. And so this is a monthly chart of Bitcoin, and again, I'm big on and these are again assumptions that the fifth wave is still in front of us. Okay, CBG, and let's look at mathematical relationships with the previous 2 cycles of the wave 3 to cycle low. And if there's any Fibonacci similarities in that view, okay? And so now we go to 2013. So this is where I am. And you can see my 1 for the Fibonacci level is at the top of wave 3, okay? My 0 is at the bottom of the bear market. And so where do we see the price of Bitcoin end off of this 3 low extension? It ends around the 4236 extension. Okay, right, and that's confluent with this line that I've illustrated here. Let's go to next cycle. We're looking at the 3 I have labeled here. Okay, and I labeled it that way because of the previous chart I shared with you. It was the strongest point in the RSI, and when I zoom the count in, it's in line with the micro count that I have as well. You kind of have a blow off here, correct in here 4 within the minor count. So this is my 3, top of wave 3 within this cycle, bottom of the cycle is 0. Where did price end? 4236 extension to a T.
That is pretty crazy.
that pretty crazy? It's like it's math shows up everywhere. And now let's look at where we are in this cycle. Okay, if I contend that 3 was here, that's why I've got it here, right, and not
Yep,
over here.
Yep, the 64. Yep.
Exactly. And my cycle bottom, I'm coming back to here. What's the 4236 extension? Remember the last chart we were on and the numbers up there, 260, 280, right?
Yep.
The 4236 is 266, 845. And I mean, and that's in line with hitting the top of this channel way later next year. So this is another way to view the market in terms of if this wave 5 is not as steep as the 3 and the 1, and this thing extends into the halvening, and let's say the halvening is the blow off top,
which is one of my hypotheses.
You made that hypothesis, so this is why I'm ending here, because if in that view, the price of Bitcoin along this model could get you up to 266 during that time frame, and literally hit this regression curve really nicely. A lot of confluence there. So, I mean, there's just a lot of math going on. There's a lot of coincidences in the past, and all I'm hearing about is a narrative that is about the inflation rate of Bitcoin going down to 1.77% or something. I mean,
this feeds into that narrative section, and I think this is where you're going with this 4-year cycle. It's not that there isn't any proof or credence to the fact that Bitcoin has responded similarly around halving dates, but I think I want to hear your thoughts on this, but I think there's two major flaws with just sticking to that 4-year cycle, beyond the fact that you have something scripted for 4 years that you think is going to continue endlessly. Which, I mean, if you want to say anything as a scam, subscribe to the idea that something is forever going to continue every 4 years in the same manner. But I think that the two main flaws with that analysis, number one, is people are looking at that in a silo environment. So they're evaluating one chart and how the price responds around a halving date, and that's the end of the story. They're not going into any other charts. They're not critically thinking and thinking outside the box like you've clearly demonstrated for the past hour here, trying to evaluate other charts that are trying to tell a story. And the other thing that I think is going on, quite frankly, is you have a lot of uneducated people who are just gravitating on to that idea because a prominent influencer is suggesting that to be the case.
Yeah, and look, I don't blame these influencers, okay? I get where they're coming from. Some of them probably make really good money doing what they're doing, right? And they're positioned a certain way. And so we're an incentive-based structure. Everything you do is based on your incentive and your positioning. So if you're already, of a certain status, of a certain influence, right, then you care about preserving probably your reputation the most and your current income. And if that's good, and your incentive is to keep it good, right? Your incentive is to keep it good. And if you're positioned a certain way that aligns with your incentives, you want the price to do what's the most comfortable with the group think. And so that CBG is what allows. However, we're lucky. Okay, this is where we're lucky in that the only way to truly get outsized type of gains is when most people do not think it's possible. If everyone right now, if the influencers were all saying, bull run is back, people on CNBC were saying, stocks are poised for new all-time highs. My friends were talking about, hey, what stock should I buy? I'm freeing up some cash. I'd be worried. So getting to my invalidation thesis, if that was happening right now, I'd be really worried. What we're seeing is very healthy, slow bullish movement, right? I want to see that stuff happen, in a couple months, where everyone starts rushing in and it starts to get euphoric. And that can last for a long time, right? That can last for 3 months, it could last for 3 years. I mean, Ben Bernanke back in I'm going to share this for this story. Ben Bernanke back in 1997, right here, CBG.
Oh man,
On this,
1997. I was just a little CBG.
you're
1997.
you're a little CBG. December 1997, he gave a speech where he said the stock market, the Nasdaq was in a bubble. Okay, was in a bubble. Let's see, the Nasdaq was 1,000. And he could have been right, but this timing was wrong, right? So we were at the beginning of a bubble.
Yep.
And like, if you were like, oh, I'm expecting a blow off top, and boom, here it is. 1, 2, 3, 4, 5. 6 months later, it goes from 1,000 to 2,000. Man, doubled in 6 months. Guess what else happened? The market can stay irrational on the euphoric side way longer than you think. So after it doubled, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 months later, it then doubled again. More than doubled again. So from the time Bernanke said we were in a bubble and caution is warranted and things just look frothy, the market quadrupled, 4x within 3 years. Unprecedented. And I'm seeing the same type of things going on right now where you've got everyone so sure about what's to come, right? What's to come, that it's the same type of thing. And so where I'm looking at, hey, I'm looking for a blow off top, somewhere in this range, 20 to 25,000 range, sometime in the next, within the next 6 months. I could be right and then wrong too, right? Like it could blow off and then just keep going. Who the heck knows? I know I'm going to have a plan, and not rely on whether this happens or not, right? This is not a guarantee again. But if what I'm thinking happens, have a plan to take a lot of profits. But again,
Well, the
you're
key
going to be.
is to scale. The key is to scale out at sensible levels.
Yep, exactly. And what am I going to be looking for in Bitcoin? I'm going to be looking for RSI. I'm going to be looking at that weekly 70 level. That's going to tell me a lot. I'm going to be, looking to see, where prices and what are we seeing? Are we seeing? We should be hearing, if this happens, we should be hearing AI is going to revolutionize the costs and justify valuations, right? AI is doing this. AI is doing that. AI is a native, or crypto is a native currency of AI, and so that takes crypto to the next level, or ETFs, or whatever you want. It's going to sound all bullish, right? It's going to sound.
Gary Gensler is going to go out and pump Algorand again. He's going to come out and get all bullish on Algorand again.
Yeah. So, yeah, man. So, it's a very interesting time. It's an exciting time. I'm going to finish off with back to this one in terms of like, all right, because people always ask me, what am I looking for in terms of like, if this plays out, I put this kind of line chart in here. Like, this is what I'm looking for the structure to look like. And then RSI to do what it should do in an impulse, right? And I drew this line, right?
This is one of my favorite charts that you've shared. I thought you did an awesome job illustrating everything here.
Yeah, thanks, man. And so what I'm looking at is we get into RSI whenever it happens, whether it happens in like I'm projecting before the end of the year, or it happens like you're projecting into the halvening, or let's say it even takes longer, right? Like I've got spot Bitcoin and I can wait, right? I do have some options trying to play around with the timing, but it's a small percentage of the portfolio. If I lose, I don't care, right? So anyone listening, the risk and options is you lose everything. A high risk bet. I don't recommend it, but I've been public on CT that I have put my money where my mouth is in terms of my projections and having options of 3 BTC worth of options on this timing projection before the end of the year. And so if I'm wrong, I lose that, and that as I should. That's my price of admission. But for my spot BTC, who cares, right? But what am I looking for? So I'm looking for the conclusion of the market, the bear or this bull market to express itself in a powerful RSI over 70, start scaling out when it gets, above, let's see, these levels, something above these levels right here. right? So once it starts getting over 77, like you said, CBG, like you got to have a scale out plan. So am I going to pick the Pico top? No, no one's going to be able to do that. It's impossible. I just want to be distributing as price expands, right? And it starts expanding whenever this happens, if it happens over 70, and I'll start scaling out at that time, all the way up and down. And then maybe I'll start getting cute with shorts when I see this reject here, buddy. Right? So this a rejection of 70, right? Like here, like here, like here, like here, like here is a signal to me, to maybe start entering some shorts on the short side, whenever that is. So
And I think one of the successes to selling out of this market whenever it does get euphoric is having a game plan prepared that is in place prior to things getting euphoric and then sticking with it. And I've preached that a lot on my channel. Know what you're going to do. Know how you're going to sell. Know when you're going to sell. What's your scale out approach? Because when you're hit with that level of greed and euphoria that exists in the market, your emotions can take over. You've got to be robotic about it.
it's gonna be really hard. Like it's a hard thing to do, selling in euphoria. I don't care who you are. It's not an easy thing to do. I remember scaling out of my Nasdaq positions. It wasn't easy, but I had some real clear signals, right? And one of them was my buddies that I've been telling to really look at stocks since the March lows. Like, guys, you gotta look at stocks in terms of asymmetry. Never been better. And I was just shouting from the rooftops for like 8 months, 9 months. They finally started buying in around January, February of 2021. And that's when I said to myself, guys, I'm starting to scale out. That's retail. That's retail. And that's one of the things that's funny enough that I use is that retail sentiment, like talking to people outside of crypto Twitter and where do you guys think stocks are going? Where what's the sentiment with Bitcoin? And I really love taking that feedback in because I think it says a lot about retail versus the smart money.
There are people outside of Twitter, this little Twitterverse, that know me personally who know at least that I'm like the Bitcoin guy or that I'm into crypto. And I know one of the things that I'll be paying very close attention to is when these individuals begin to re engage with me.
Yep. Yeah, when you start getting a lot of bullish re-engagement, no doubt about it. That most certainly is a signal. And I think that part of it right now is where I don't know, we get mixed signals, right? Because even now, there's some bullish people out there, but that's okay, right? Like that's how it starts. That's how when people start dipping their toe back into the market. You need that. You need people to start getting bullish, and there's going to be a time where, like I just showed with that Nasdaq chart, it doesn't matter if everyone's bullish, right? Like we'll see like put the call ratios at historic lows, and it'll be that we'll see greed for like months, and it
Yep.
won't matter. It won't matter. I don't know when that's going to be. If that even happens, again, these are just projections. But in a true blow off euphoric type stage in markets, that stuff won't matter because it can stay greedy and irrational longer than you're trying to time. When is the greed going to end, right?
Yeah, look, I wanted to. This live stream has exceeded my expectations in terms of the quality of content, and how long it's been running as
Dude,
well. And I wanted
we've been
to.
going since what is it, almost 7 right now?
Yeah,
Wow.
yeah, man. No, no, no. Let me just say a couple things.
Yeah.
First off, you did a phenomenal job preparing for the live stream, and I wanted to personally thank you for that. You had a lot of great material in here, and you articulated things extremely well. So first off, I want to thank you for that.
Yeah,
Um,
man, you got it. I
and
took time because this is important to me. I, I've told you before, CBG, that I've watched your live streams. before I was ever really on Twitter, right?
Which is crazy to me. I was sharing that with my audience. I think it was, I don't know when. I shared it with my audience at one point when I announced that you were going to be on. I had no idea that you watched my live stream back in the day.
oh yeah, yep, absolutely. So I have a lot of respect for you in the way that you do things. So when you asked me to come on, I took it very seriously and wanted to prepare some good content for you.
Well, this is head and shoulders above any of the live streams I do. I mean, this has been great, and I really appreciate it. And where I was also going with this, if you don't mind, if we have a few minutes, I did promise my audience we would get to a few questions, and I see a couple good ones in here.
Yeah,
That might be okay.
absolutely.
Sweet, cool.
Yeah.
Um, all right. So one of my longtime followers here was asking about if you look at the Bollinger Bands. I know there's been some discussion about the historic low levels of volatility and where Bitcoin has been at, and Ethereum for that matter, with the Bollinger Bands. How much do you pay attention to that?
Oh, I do. Let's just go to a chart, and
This is great.
I
You have
didn't.
a chart prepared. Yeah.
I do. I didn't have time to review this one, but that's a great question. This is on my, I think it's my pinned tweet. It's like the most bullish chart in all finance, in my opinion. This is the monthly chart, Coinbase Bitcoin. Okay, and I don't have the Bollinger Bands up right now, but I'm going to put them up in a second. These are the EMAs, the monthly 5, 9, and 20. Okay, and to me, again, this is just a beautiful channel, right? Going back to 2018, respecting the bottom of this channel, respecting the top of this channel. It's like this massive bull flag. Where are we having problems right now, CBG? We're having problems here, right? Like, is there any surprise? Like, we talk about symmetry and math, and this line is a clone of this line, right? This is a clone of this line, and literally, it stopped us right at its tracks last month, this month, and we're having trouble here. But let's zoom out. We're above all these short-term EMAs. We've got this structure, this accumulation structure, okay? And here's a Wyckoff schematic. Let me just go to the weekly really quick because it illustrates the schematic a little bit better. And then I'm going to answer the Bollinger Band. It's such a long answer, man. I'm sorry.
Dude, no. You articulate yourself so well. Go on, please. I'm enjoying it.
Okay. So another reason, this is another point of confluence to why I think that the accumulation phase is over. Like, it's over. And we are in expansion. It's just taking longer to expand. Is looking at a Wyckoff accumulation schematic and just kind of take a look at the price of Bitcoin since June of 2020, right? It almost follows this schematic to a freaking T, right? You've got this SC phase, this AR back up here, ST in phase B. You've got this spring down here, reclaim, and then, this LPS, and then you break out of this accumulation structure. I mean, it's like, I don't know, man. It's just like almost to a T. We broke out of the accumulation structure, and now we're just having some trouble at a key technical area. What are we seeing? I mean, it's like this bull market was this tale of two accumulations and two expansions. We're waiting on our third. Why do I say two accumulations? Well, it's almost.
It's interesting you're making this comparison because I did this like a month and a half ago.
Did you?
Yep.
So you got this like accumulation range, right? And the spring event, right? COVID was a spring event, and then you come back up, LPS, BU, LPS, SOS, reclaim, and then it's gone. And so, it's just it couldn't be any more probabilistic to me that what people are saying. The narrative is you've got 2 years, you've got a year to accumulate. Is that supposed to be the reality that everyone knows the answer to how long you have to accumulate?
The market is not that easy. I just don't. It is not that easy. It's not going to be scripted. It bothers me constantly hearing that.
It shouldn't be, and it should be. I said this on a video I did a few weeks ago. The game mode for an asset when there's more participants joining and more eyes and more algos and more AI and more everything should be harder, right? You play video
Agreed.
games growing up, right? The further you get in the game, what happens? The harder it gets. That's life. And that's why should this be any different? And so back to the Bollinger Band question. Bollinger Bands tell us a lot, right? And here's a monthly Bollinger Band experiment. And what are we seeing here, right? We are over, and I'm not going to go back because this is a Coinbase chart, it doesn't go back all the way. But if you go back on any long-term chart of Bitcoin, throw up the monthly, throw up the Bollinger Band, only one time has it reclaimed this midline of the Bollinger Band, this orange line, and not gone to the top end of the band, which right now is 44,000. And that was COVID. COVID got us through it. But no other time in its history has it reclaimed this midline and not at least gone to the top of this line. So forget, the all-time high talk and all that, but the short-term price projection probability, right, is that we at least get to 44,000 before any type of substantial correction.
That's literally a 50% move from here, rough math.
Yeah, 50% move here. And so, yeah, I'm a big fan of the Bollinger Bands. They tell us a lot. I use them on that NASDAQ chart that I shared. I don't know, maybe he joined a little bit later, but when I was first doing the NASDAQ chart, this was one of the reasons I entered the market. Let's see. There we go. I entered the market long right here. Is you don't get too often. You don't get a test of on a monthly basis. These Bollinger Bands, and it doesn't go directly to the top end of the band. You just don't see it. One top end of the band. One top end of the band. We didn't even get to the bottom of the band during COVID. And so bottom of the band, top of the band. This was a volatility squeeze here, contracted. These bands were very contracted here. The squeeze resolved itself to the high side. This squeeze resolved itself, kind of faked out to the high side and then low. And here, it's again, just a point of confluence. I posted this when we reclaimed the midline on the monthly, that the next stop for me was the top end of this band, which we never hit. And so that's another reason why, I'm looking at the markets, low time frame, saying, I'm seeing a pivot. I'm not seeing a major correction here until we get at least the all-time high, which is a breach through this band. But that's a long-winded answer to that question.
No, well stated.
Yeah, I got time for as many questions as you have. By the way, I just did my food delivery while we were talking. That was the only thing on my list. Was my my dinner order, which I just placed.
I feel you there. I'm starting to feel the hunger pains. By the way, you're getting a lot of positive feedback in the comments here in terms of just appreciation for you coming on the live stream. Wanted to throw that out there.
Cool, appreciate it.
So I'll read this question the way it's worded, although I think it should be worded a little bit differently. But do you support the fact, this is specifically directed to you, do you support the fact that the economy, he says the word fact, which I wouldn't agree with, but do you support the fact that the economy is far away from a recession? And at what point would you agree to a recession getting in place?
Yeah, I'm not an economist, but it doesn't, things don't look good to me, man. Like, and again, the economy doesn't mean stock market or risk asset valuation. Those are two separate things.
Glad you hit on that, because I was gonna say something. So yeah.
Yeah, I mean, like when you look at metrics like debt levels, credit card debt, some of these interest rates on this credit card debt. To me, the economy is looking good right now because people are able to finance that inflation, right? They're able to put it on a credit card, and we're in a society of instant gratification, instant FOMO. Everything's FOMO, instant gratification. Worry about it later. And so middle class is getting squeezed hard, in my opinion. Unemployment still at historic lows, but that's lagging. It's a lagging indicator. Yeah, I see pain, man. I see this thing resolving, this bull market kind of resolving all this money that's been put into this system. I don't have it up here, but if you measure SPX and M2, it's basically like a triple top right now. And I see it resolving with the amount of money that's been created, 40% more in the last 2-3 years. And like 0.05% of it taken out through QT. Remember that narrative? uh, that money is going to find itself, in my opinion, it's going to put itself in a position where it needs to gain yield, and 5% in an inflationary environment isn't going to do it. And I know, signs of deflation are coming. Again, I don't know. I'm not an economist, but I just know, in my opinion, that money is going to find its place to where it's treated the best. And I think that capital is going to be induced into hard assets. And so that's where I'm positioning myself. But yeah.
And we spoke a little bit about this when we connected before the live stream, but there's all sorts of warning signs in the economy. I don't think, and I'm glad you hit on this, but this, charting something and seeing how an index is performing, or how the stock market is performing, or crypto, it's very different than how the real world economy, in terms of what its health is like. But one interesting point that we sort of spoke about was just levels of personal credit card debt and how high that is, and what does that actually signal. I certainly think that is extremely concerning.
It is, man. Now imagine a world where unemployment, and it doesn't need to tick up a lot, right? Like, let's just imagine it ticks up, a couple points, and now you multiply that number of people on an aggregate scale, and just take the delinquencies on credit card balances, right? Like it's like the old domino game, right? Like you don't really see the whole string of dominoes falling until it gets going, right? And
Yep.
the first couple are hard to see until the whole thing gets going. And at that point, who the heck knows? All I do know is if this scenario kind of plays out, you're going to be fooled again, right? The narrative's going to be soft landing, recession avoided, everything is good, right? Like that's going to be the narrative. Fed did a great job, and it's going to sound like all that stuff was avoided, and yeah.
Historically, once that yield curve starts to uninvert, that's when historically you should start to get a little worrisome.
Yep. Yeah, man.
Got another great question that came in. This might be the last one. This is a really good question, because I've given my own thoughts on this personally. What Bitcoin dominance do you think we should be at in order that a sufficient drop occurs to give alts a decent run?
Oh, that's a great question. Let me pull up my Bitcoin dominance chart. I haven't visited this one in a while. And this is one I think I was kind of wrong on, but I think I got the general idea right. And what do I mean by that? Let me get rid of these Bollinger Bands. Let me throw up. Well, no, I'm gonna keep the chart looking like it is. Okay, so I posted this on Twitter maybe last month or 2 months ago, where I see dominance, in terms of levels, right? Levels. I drew this white line, if you can see right here. Can you see that?
Yes.
That white dotted line is my second level, like my buffer level to this entire chart we were looking at. So I've got a flag structure. I've got a deviation out of this flag structure, and I kind of had it deviating as much to, and look at where it stopped, to a freaking T, to this level, which goes all the way back, and it shows up better on a weekly, but just for the sake of time, we've got, again, a deviation that occurred up here in a bearish type of formation that resolved itself down. Inverse kind of head and shoulders back to the top of this range. You had this falling wedge, deviation out of it, and then resolved itself down, and I just see kind of this bear flagging structure. I hear this narrative that alts are dead. I hear this narrative, right, that it's over. It's over for alts, and all I can think to myself is, and I'm not an alt CBG. Like alts aren't my thing, but if they were, and I knew the right projects to invest in, I probably should watch you more often because it seems like you got the download on that. Here's how I would be looking at this market. I would be looking at this as everyone saying, okay, Bitcoin dominance is ready to rip. My view would be, as a contrarian, would be this is just kind of a flagging structure that it's deviated out of, and there's some precedents for some deviations here. But the levels, to me, this is kind of at the top of the deviation range, and my expectation would be for it to get somewhere down towards the bottom of this flag at a minimum. Now, I could be wrong. The confidence in this call is low, right? Because again, I'm not in alts, but if I'm just as a contrarian, you're asking me my opinion. It would be that it's not what everyone thinks it is. I just that's the way I'd be looking at it. So,
One one thought I wanted to get while you have that open, um, and I won't go through the details of my own analysis on the dominance, but I wanted to see if you agree or disagree with one general premise that I've shared with my audience. If you actually put it on like a weekly view, it looks like you have that. Oh, you have a weekly view on.
yep,
You'll
yep,
actually see if you draw a horizontal like zone of support, you'll see there's really a horizontal zone of support that Bitcoin has back tested a few times between essentially 39.9%. My screen is freezing up, and
yep.
39.3. And what I've shared with my audience is the more you come down and you continue to back test that area that has served as support, it actually weakens. And so I fully suspect that once we get down to that 39% area, we are going to break right through that. That is not going to hold as support. Do you agree? Would you agree or disagree with that?
Let me just pull it up here and see what you're talking about. So I got the line down. You got 1, 2, 3, 4, 5, 6 tests, 7 tests of that line, right?
Yep.
Uh, yeah, I mean, so the more it's tested, the theory is the weaker it gets. And so the the way I would view this, again, like I think about things in terms of springs, right? Elasticity. If this is one major deviation, right, deviated out of this flag, it's like a slingshot that just went too far, and you're pulling the string back. It's going to snap back with as
Yep.
much force. And so, if I'm thinking about it in those terms, yeah, I could see that getting breached, and then, a test down to 36, something like that. Who knows? Maybe it goes lower. But just as a kind of a contrarian, everyone's so sure that there won't be an alt season, and
Oh, that's
alt
crazy to me. That's crazy.
alts are dead, and Bitcoin dominance is just going to keep skyrocketing. It just has me very much again, and most of my investment is Bitcoin, but I don't I'm big on narratives just not coming to fruition, and I'm looking at, again, this weekly chart. You have precedent for pretty valid type of structures, right, that are deviated out of, right? Like you've got a wedge here, falling wedge, deviated out of, then like an IHS, and then boom, right? This is a
Yep.
bear flag. This is a bear flagging type of structure, right? Where you've got, this is the flagpole. Do that, right? This is a flagpole, and so I mean,
It's interesting the way you have that drawn, and I'll have to reevaluate my chart because I did. So it's funny you say that because I did have a bear pennant drawn since literally the end of last year is what I was looking at it and going into the beginning of this year. And then there was a small deviation from how I had it drawn, but then we re-entered the pennant, and I was like, okay, well, there we go. We had that deviation. We came back into it because you can actually draw that descending line at the top of the bear pennant. You can draw
yep,
that a little bit differently where the downward line is a little bit more aggressive. It's slanted deeper. And yeah, see how we broke out of it there, right
yeah,
there? Yeah,
yeah,
see,
yeah.
we broke and then we re-entered it. I said,
Oh,
okay, we're
yeah,
good to
yeah,
go, and
yeah.
didn't pan out.
Right. Yeah, there's so many different ways you can interpret these things, right? And so I guess the what I'd be looking for here, just keeping things simple, right, is that, right? So if we're just
Yep.
looking at this the most simplistic way possible, you just want to see this area right here is very important. This area there's just a lot of confluence. We rejected off of that area that I had marked. And now it's kind of making another. Let's just see what RSI is doing out of curiosity on the weekly. Yeah, so RSI isn't in overbought, right? You've got higher. Yeah, so you don't have any bear dibs really playing out there.
No, I don't see anything. What level are
But
we at on the RSI? Where are we at right now?
we're at 63.
Okay.
But this area here, like if we break this trend line and it reclaims inside this range, then I'm watching. Then you guys start to get excited, in my opinion, right? So if I'm watching this, I want to see this break. Let me change that color. I want to see break, kind of try to come back, fail, right, and then kind of do one of these things right here, right?
Yep.
That's what I want to see. Even retest up here, right, and then come down. That's what you want to see. What you don't want to see is this, right?
Correct.
That
Continue the uptrend.
Yeah, you don't want to see that. So that's kind of how I guess I'd be looking at dominance.
Sweet. Well, yeah, I think we are out of questions, so I'm gonna put my camera back on so that everybody can see my smiling face.
All right.
And what I wanted to do real quick, I wanted to point everyone. I should have done this honestly at the top of the live stream. I'm pointing that everybody to where Kush is located at on Twitter. If you're already not following him, make sure that you give him a follow on Twitter. You can actually, I'm subscribed to your YouTube channel. You just started up a YouTube channel. You put a video out. I know you missed a week there. You put one out this past weekend. Where can they find you on YouTube?
Just at C Alamzada. It is my YouTube channel.
And you're aiming, it's more of an informal thing, like once a week, you're sort of looking to.
Yeah, I like expressing more than a picture and a few words in terms of a chart, because I feel like there's an image and then there's a story. And so that's what prompted me to do the videos and some of the short form stuff on Twitter. So where I have time, I'm trying to just expand on what I've been, kind of publishing throughout the week on Twitter, on the YouTube, on the weekends. So I hope to keep doing that, and just getting a little bit better with that format as well.
Yeah, and I've caught all your videos. I think you do a great job of once again just articulating yourself. The thing. My view is that whether somebody agrees or disagrees with a viewpoint that you have on the market, what I appreciate is when somebody brings value-added views to the space, right? Charts, ways of thinking outside the box. Even though we feel similar in terms of what will play out over the course of the next 6 or so months, even though we feel similar, you're presenting different charts that I have not shared before. That's the value to me.
Yeah, I appreciate that, man. I try to keep it's mostly high time frame stuff, right? And take some stabs at guesses about lower time frame stuff, but for now I'm just focused on keeping an eye on the trend, and maintaining the view that we're still in an uptrend until proven otherwise. And so I appreciate that. And it's Kush Alamzada and at Alamzada C, not at C Alamzada. That's my Twitter. So you just type Kush in and I'm sure you'll find it.
All right. Well, we are going to sign off. I wanted to thank you once again for just coming on. I'm hoping we can do this again because this was great. I mean, it's funny. It's actually kind of comical thinking about it because I think I made a comment to you when we connected. We'll probably be on this live stream for like an hour. We are approaching 2 hours on this live stream. That is phenomenal. That's phenomenal.
Awesome, man. Yeah, send me. I know you are anyway. A copy of this. I definitely want to tweet it out because I think we ran over a lot of good content here today. I appreciate you giving me the time and the format to do so.
Yeah, and appreciate you sharing your thoughts and coming on. Like I said, I hope we can do this again. Maybe when there's a little bit more bullish momentum that's picking up within the markets, we can look to reconnect. But tons of awesome views. We'll have to see how everything pans out.
Yes, most definitely. When we get that movement, which I suspect is going to be pretty soon, man. So let's hope to connect again very soon.
Okay, sounds good, Koosh. Until
All right.
everyone, until later, until next time, everybody, tune in tomorrow. But if you haven't already, hit the thumbs up button. Make sure you subscribe to the channel, drop a comment. And until next time, let's all spread awareness and carry the education forward.
Love it. Take care, CBG.
All right,
Thanks.
you too, Koosh.
Bye-bye.